My name is Varan. I'm here from Iconic Mortgages with Chris for another Mortgage Minute.
Hey guys, back with another Mortgage Minute. This time I think we're going to touch a little bit on investments,
Love it.
especially going into the 2025 year, the new year, and ending 2024. I think it's kind of interesting with everything that we have going on in the market, the way that interest rates are coming down and whatnot, and also all the new rules that they're starting to change.
Correct.
To kind of like look into what is there to do in terms of investments, or is there any new opportunities that are coming in the new year that people can look at?
I think the opportunities are the same, but it depends on how you look at it. I think about the opportunity that we have right now is a buyer's market. The inventory is high. It's a great time to get into the market. It's not I'm not trying to be salesy, but I feel like everything's on sale right now.
Yeah.
If you're in a buy, if you're looking for an opportunity, it's a great time to buy. And the rates are also, I understand the rates are high. Rates are also going to come down as well. I think we're on the tip of the iceberg in terms of what's going to come down over the next 1 or 2 years. People may think you're a mortgage broker, you want to sell mortgages, but I'm an investor as well. If I'm in a capacity, I will be going and buying it.
Okay, so you personally, if you could, you would be
I see
going
an
and buying
opportunity.
now.
I see an opportunity on here.
Okay. Is there anything in particular that you're looking at in terms of like good investments right now?
I'm a firm believer in legal duplexes.
Okay.
That's cash flow and market value is always there. You are diversifying the tenants as well, and always opportunity. And the legal apartments always carries value. Even if you're a first-time home buyer, you may want to buy something you can generate income from them. So I'm a firm believer in legal duplexes, and also the condos. Okay, if you look at the downtown condos, like inventories are flooded. And I had a lot of people told me, like, at the end of the day, you want to have something in downtown, even if you're not investing for your personal life. When you're sick, you're going to spend time in the best hospitals are in downtown. If your kids are going to go to school, probably chances are there's some good schools you will be going there. Your kids may be working there. So even though it could be a short-term investment, it could be a lifestyle down the road as well. So
That's interesting.
In that sense, I love downtown condos, and there's record low prices right now. People are struggling to sell the condos, like way below the market value. People are walking away from their assignment sales. So it's a great time to get into the condos as well. And I'm also hearing a lot in outer provinces, Alberta, in Calgary and Edmonton. That's one of the reasons I'm also bringing a speaker from Alberta to talk about investing in Alberta and the property management as well. And as a landlord, you have more favorable bylaws and landlord tenancy compared to Ontario, very similar to the US market.
Yeah.
In Alberta. I don't know for how long, as of right now.
So it's more landlord friendly over there.
Way more landlord friendly. When the lease is up, I think, I don't know much about it, so that's why we have someone to come and talk about it. But that's another thing in Alberta as well. But in terms of something I really want to look into is multiplexes. CMHC has a great product for multiplexes. I haven't exposed that part, and personally, that's something I want to get into. Multiple apartments, energy efficient, you can go up to 50 amortization. And minimum down payment, because CMHC is all about affordable housing. It's a lengthy process. It's a very lengthy process and very complicated process as well. I don't understand the market well. I'm trying to learn into it, and that's something I would explore in outer province, especially in Calgary, Alberta, because the land, like, you don't want to have a 20-unit apartment and stuck with the tenants, bad tenants.
Yeah, exactly.
Which you don't have a control over. I think those provinces has a little bit of a more leeway and more landlord friendly, so that's something I will look into it.
Yeah, it would also be good because the prices over there are probably a lot less than they are here right now.
Correct. And I'm an investor, we talked about many times, and I also invest by leveraging as well. I always advise my clients when instead of having the house paid off, extract the equity, take the equity out and flip into investment. You can write off the interest. There are so many opportunities as well. But GTA investors, Toronto investors has to come to the terms, you cannot cash flow and you cannot have an investment. You need to come to the mindset, I'm buying for the long-term growth. I cannot cash flow.
So I've been told that as well, that when you buy in Toronto, you're banking on appreciation. Exactly. Pretty much.
Yeah. If you don't understand that, if you are not comfortable with it, you cannot invest in Toronto.
Yeah, because
Then-
you're going to be paying out of pocket for
100%.
every month. Yeah.
Then you may have to look in a different market.
Yeah.
Then you cannot get appreciation. So you need to understand what you want. You want appreciation or you want a cash flow. Some places they have both, but one of them is going to be higher. Is going to be appreciation going to be higher, and the cash flow is going to be very low. And if the cash flow is going to be high, appreciation is going to be extremely low. You are not going to have both.
You can't have
You can have
both
the
of
cake.
them going
You
together.
can have the cake and eat the cake.
Yeah.
And we also talk about mortgage rate, what product right now. Everyone is pushing the fixed terms. I am pushing the variable rate for the clients.
And is this only like for residential, for investment, or for everything across the board?
The products.
Yeah, like if you
I'm talking about regular
Okay.
residential mortgages.
Yeah.
That could go with the commercial or any other mortgages as well. I understand there's a big spread between a variable rate and a fixed rate, almost more than a 1% spread. But it's an opportunity cost. So let's say, for example, right now variable is a prime minus 70, prime minus 80. It's in mid fives, high fives. Fixed rates are low fours. Everyone's like, why do I need to take a high rate? It's an opportunity cost. You can always go from a variable to a fixed without paying a prepayment charges. You can take a 4.2 right now or 4.3 on a fixed rate right now. 6 months from now, that could be 3.7. You can convert it and you can fix it at the time. Why you're fixing it right now is give you flexibility to change and adapt to the market. Like,
And there's going to be big changes, clearly.
it's going to be big changes. We are seeing it through
Yeah.
our eyes. Like, prime example, I had a client. I was looking at one of my memories showed up on Facebook. September 25th, 2023, the best rate on a 3-year fix is 6.14%. September 25th, 2024, the best rate on the 3-year fix is probably 4.39 or like a 4.29.
Big difference there.
Almost 2% different. If I told a client to take the variable at the time, they would say, what are you talking about? We want a flexibility. Imagine if the client took the variable, they could have converted right now at 4.39.
And they would only have to pay that for the year.
Or 6 months or 9 months.
Yeah, exactly. As opposed
Right?
to what
That's the opportunity cost right there.
Yeah, makes sense.
Right?
So now it's the same thing. Like we're still looking at that opportunity cost as the rates keep on going
Yeah.
down. Like even on the 23rd, we're predicting a 50 basis point cut, and
Yeah.
then potentially 25 or 50 again in December.
Correct.
So it's
And it's going to continue to, that it's going to be cut.
yeah. When it comes to the cuts and all that, if I wanted to, let's say I have my variable rate now, and I want to jump into the fixed eventually to capture that lower interest rate, will the fixed keep on going down as the rates are being cut, or is it going to stay steady?
It's very hard to say because the fixed rates are based on the bond yields.
Yeah.
And the bond yields also add up with definitely the rate cut and also with what's happening with the economy as well. The bond yields went up when there was oil prices went up. So it's a lot of things, but the rate cut has a lot to do with the bond yield.
Okay. So it's tied closely
It's
to
a that
that.
close. Yeah.
And then what's the indication for everyone that it's time to make the jump?
It depends on what your comfort level is.
Yeah.
For me, it could be 3.9 and 3.79 will be a good rate. What's the determination is your risk tolerance. My risk tolerance could be at 3.59. For someone, it could be 6.14. That's why someone took the 3-year fix at 6.14 last year. Right? So it's based on everyone's need.
Yeah. So it's just
And
kind
the
of
risk
knowing.
tolerance, yeah.
Some people want to know what they're paying and what's going to interest and principal, and some people are willing to let it ride.
But it's mind-boggling. They want a lower rate, but they are fixing at the higher rate for the next 5 years, knowing the rates are going to be coming down.
Yeah.
But they tell me I'm risk diverse. I'm like, no, you are not risk diverse. You are anxiety diverse.
Yeah. Well, it makes sense. You never know. Maybe it's going to go up, right?
Yeah. So that's why
Because people, even back in the day before everything happened with COVID, like people kept on saying like, take the variable,
Yeah.
right? But at that point, it was basically 0%.
We were the low and it's going to keep going up. We're the highest. It's already
Exactly,
coming
yeah.
down, right? So you had to adjust to the market.
Yeah. So now it makes sense. But back then, people were still saying going variable, even though it was super low.
I remember some of the videos, that guy said take variable, and everyone was like bashing.
Yeah. Yeah, that was when they were high.
Yeah.
Now we should go back to those videos.
Back to those videos and
Show
make
them.
some- yeah.
So we went through a couple of the investment opportunities for the new year and things that you're kind of looking into yourself, and kind of covered a little bit on the interest rate. I know one of the last videos that we did with KJ, we were talking about laneway homes and garden suites and investing in those kinds. And we broke it down with each other while we were there on how good of an opportunity it is.
Yeah. It's a great opportunity.
Yeah, amazing opportunity. So is something like that, are you still looking at it as an opportunity?
Absolutely.
And on top of that, what are the financing options for something like that?
That opportunity, Chris, I think is going to be coming. We're going to see a lot of those garden suites and the laneway homes over the next few years.
Yeah. And it's, sorry to interrupt you, but what he was telling me, my uncle built a garden suite in his place. He's in Woodbridge, and he was told he was the first one in Vaughan to apply for it.
I think KJ said he was the first one in
KJ
Toronto.
is the seventh one.
The seventh one in Toronto.
So it's been around, like they've been stamping these things apparently for a long time.
And it's going to keep coming.
And it's going to keep coming. And it's like super new because these guys are all, like my uncle number one, incredible to think that. I didn't believe it when he told me until I talked to KJ.
Yeah.
KJ number 7 in Toronto. Like, they're happening.
And it's going to be 7,000 no time.
There's going to be 7,000, of course. Yeah. So they're happening, but it's not as often as you think. So,
but not everyone can do a garden suite.
Okay,
you need to have enough lot size.
Yeah, you need the land and everything.
And some of them may not able to do garden suite. They may add the second basement apartment, legalized basement apartment, right? But I think they're going to be stamping a lot of these things with each cities. Mm-hmm. It's going to be a lot of opportunity for our business as well, and also cash flow purpose. I think we broke it down. If the mortgage payment is about $500,000 for every $100,000, you put a garden suite for $200,000, $1,000 payment on external mortgage. Maybe you're bringing like a $2,000, $2,500 in the rental income.
Yeah, and you have to float that for, I think KJ was saying 6 to 8 months until it's built.
Correct.
And you can rent it out.
Correct.
Yeah.
So it's a great opportunity.
Yeah.
If you don't want to buy something, maybe it's an opportunity for you to create an additional income for you.
Yeah, exactly. Even like that's a good opportunity too for not just like investors, but even I was thinking about it for like my parents. If they have money laying around or they can take money out from their house and as in a retirement, they can have that.
That's an additional source of income for them to keep the lifestyle going.
Exactly. Like that difference between how much you're paying to borrow that money and what you can collect is like $1,500 per month.
And because look at it, who lives in the bungalows? Mostly the elderly.
Exactly.
And the reverse mortgage is one of the biggest things right now. And you can take a couple $100,000 from a reverse mortgage, put a garden suite. You are not making any payment. You are not leaving the house. It's an additional source of income. You have a $2,500 coming in. You are not making any payment. Your house is also appreciating.
Makes sense.
There you go, bingo.
Yeah. So
we solved $1 million question for the seniors.
Yeah. So instead of them taking the money out and living on that money that they're taking out, they can just put it into that and start cash flowing off of it.
We just came with a good solution for the seniors.
We can't release this.
We
have to save this for ourselves.
Yeah. No, this is a great thing for the seniors.
Yeah, 100%. I think it's a good opportunity. Been pushing it to my parents for like ever since I saw my uncle do it first, and then I see KJ doing it as well.
And we had to call when your parents need to refinance.
Yeah. Of course. So
even for the young professionals, like think it's appreciating. Imagine how much. So let's say in our age, let's say we put the garden suite. Like let's say how much it's going to worth in like 10 years, 15 years from now.
Yeah.
Like these investments are long term.
Yeah.
Like you're not seeing, it's like growing a tree. It's not going to give you a shade for next 10, 15 years. It's the same thing. These investments are long term.
Mm-hmm. Even when we were talking, I was thinking too, like if you were to have your place, then build a garden suite on top of it, that where it's increasing how much income you can actually create with it, are you then also increasing the value of your home
100%.
by that much?
If the unit is costing $200,000 a bill, the same unit is going to cost you $400,000 a bill in 10 years from now, the way everything is going up.
Mm-hmm. Yeah.
Right? So that's why I look at it.
Mm-hmm.
Everything is a long-term investment, especially in the real estate.
Mm-hmm.
It's not like a pump and dump. You just buy a stock, make it, cash out, go out. It's not going to work like that.
Yeah, that makes sense.
Yeah.
It's a super interesting space. I think like the opportunities there now as they're trying to create more affordable housing and stamping these approvals. So if someone's interested in a good opportunity that's pretty timely, I think probably laneway houses, garden suites is something that they can look into.
Yeah, absolutely.
Yeah. So with that, is there any other opportunities that you've seen that come across your desk?
When you talk about garden suites, something just went through my head right now. Maybe it's a good opportunity for the Airbnb as well. I don't know how the short term work with the.
Yeah, that could be really good too.
Every municipality has a bylaws. You can probably have a nice run Airbnb. Like it's a very European.
Yeah.
Like I was talking to someone who's European, and in Europe, you literally live with the parents.
Yeah.
And you run like I don't know what they call it, annex or whatever it is. You build another separate unit for the kids.
Yeah.
That's what's coming in. So it can be completely separated. It's also maybe a good opportunity for the short-term rentals as well.
Oh, for sure. Even if you live in the backyard suite and then Airbnb the
front,
house, the front of the house, you're
I have a
collecting
client who
income on
lives
that.
in the basement and rents upstairs.
Yeah, exactly.
Yeah.
Like house hacking it.
Yeah.
Crazy. So I think that also would be a good opportunity. Even like, one of our friends Airbnbs their place, and whenever they put it for a lot, so whenever they get it rented out, they go spend the day, like their night.
Probably
at
they go
a
and stay in a
motel,
hotel or something.
or they exactly, or they stay at their parents or something like that.
Makes sense.
So people are out there that are gonna actually book out your place. It's just a matter of getting it ready to where you can do it.
Absolutely.
So I think that's a good opportunity for sure.
We're solving problems.
So besides garden suites and laneway homes, other opportunities are out there that I've seen, and I don't know if you know, but my grandfather back in the day, he bought a bunch of land in King City, just straight land, but back then it was a lot cheaper than it is now. Now, if you want to buy land, it's like millions of dollars. And from what I understand, if there's no existing property on there, you can't get mortgage or financing on it. It's very hard to get it. Like if I wanted to go purchase some land, let's say up north, maybe in Tobermory or something, like how would I go about getting financing?
It's a very hard one to finance, especially when you don't have a property. Most of them are cash buy.
Okay.
And there are some lenders, they will lend 50%.
But you need the other 50.
You need the other 50% high down payment. But these are hold, right? You're buying a land, you cannot use a rental income to qualify because of bare land. It's not serviced. So usually it's a 50 cents on a dollar in terms of the financing.
So that's like the only way pretty much.
That's the only way. And also you can, if you own a property, you can refinance your property, take the equity out, and you can always invest back into the land as well.
I see. So use something that you already have existing and kind of put it there.
It's like a cash buy.
Yeah.
So let's say you have a house, you have let's say for mortgage, you can refinance a house and buy the land with the cash.
Okay. And let's say you just have like land and is there any way to like work around it? Like, do you need could you put up a property there that's kind of like not fully like
Oh, you mean like a custom built home?
Yeah, can you put something
So there are financing, it's called a progress draw.
Yeah.
So let's say, for example, there's a land, then you have a plan in place what house to build, and they'll do an appraisal based on how much it's going to be worth at the end of the day once the house is built, based on the comparables and based on what you want to build, then you can get the financing on stages. So that's another option. But that's not something for someone to hold as an investment, that's someone to build and move in.
Okay. So someone's going to build that, move in, and that's how they get that.
Correct.
Okay. So they move into that one. Is there anything like that you can do as an investment for that? Or even like how does that work? Like when they give you that loan.
Oh, those are like a custom built home for them to live in.
Yeah.
Either they are a builder, they want to build and they want to sell, or someone wants to move in. They want to buy a bare land, they want to build a house and they want to move in.
Yeah. But when you get that money, how does it work? Is it just like a normal mortgage, or like do you have to?
No, it's not. It's a progress draw. So they will advance through the stages. Once the foundation is up, when the wall is up, when the interior is done. So it's called progress draw. You can get this financing through the bank. It's not easy. Like it's a lot of appraisal, a lot of inspection. It's not a straightforward transaction. It can be done, and most of these transactions go through the private lenders. Because it's not easy to get this financing in place. Then once everything is done, you can refinance and pay. Like if you had to go through the financing through the private lenders, you get the financing, you get a house done, then you refinance with the major banks and you pay the private lender off.
Yeah.
And usually it's about a 1 year term.
With a private lender.
Correct.
But don't you want to stay away from private lenders?
It's actually leads into the next conversation we're going to talk.
Yeah.
It's a very, very interesting thing. Private lending or private money, it could be a deal saver or it could be a deal breaker. It depends on what is it for. Private mortgages are it can be very intimidating and it could be very scary as well because it's a non-regulated lenders. So they don't have a proper guidance. They are lending the money on the equity of the home. So that's mean we don't have a thorough underwriting compared to the banks. But it could be a saving ground for a lot of people. It depends on what is it for. As long as a borrower understand why are they borrowing the money, how are they going to keep up the payment, how are they going to exit out of the private lending, it could be a short-term solution. If you don't understand because you just want to use a house as a cash machine, you don't have a plan in place, it could be a dangerous thing. Because the payments on these are very, very significant.
Yeah.
So you need to understand what is it for. Let's say, for example, you are an investor. Like I have a client working right now. They want to buy a property. They want to renovate it. They want to sell it. They have a 35% down. They own multiple properties. They understand how complexity the financing based on the properties and the self-employed. They want to take a private mortgage, renovate. It's fully open after 2 months. They sell it and they move on. For them, it's great. If you are a client, you're already drowning on the first mortgage payment. You're taking the second mortgage to keep up the first mortgage payment. It's not the best thing. Where you cannot keep up the 2.99% or 3% mortgage payment, how are you going to keep up the 12% payment?
Yeah, now you're taking something that's way bigger than what you had
Exactly.
before. Yeah.
It depends on what the purpose is. I really ask them, you had to do a risk assessment of the client. How are you going to keep up the payment? What's the exit plan? How are you going to pay this off in a year or in 2 years? What happens if you don't pay off? Can you keep up this payment? How long you can keep up the payment? Well, some investors is great. Someone own multiple properties, the condos coming up, they want to close, they don't want to go through financing, they know how complicated getting the financing when you own multiple properties, they want to close, they want to put it on the market next month, they want to move on, great. It depends on who is it for.
Yeah. So you kind of have to like assess the situation and see like, okay, what's the plan here? Is it are you just using this to try to float and like to get out of the downward spiral that you're already in, or do you actually have a plan on like this is going to help you take the next step into something else?
I think exactly. Like if you're trying to run a life with a private mortgage, you really need to evaluate if you need a house or not. If you're looking at a tool to make more money or towards investment vehicle, then it's okay.
Yeah.
It depends on who is it for.
And then with private mortgages too, is it like as scary as people think it is, or is it the same as?
It's not scary as
bank?
you think. There are some great lenders out there. It depends on who the lender you're working with. There are some great. So I usually source up my private funds through a MIC. So how it's regulated through Ontario is called MIC. It's a Mortgage Investment Corporation. They are regulated by FinTrack. They're regulated by FISRA, and they're also regulated by Ontario Security Commission. So they have some guidelines in place.
Okay.
But there are some private lenders, they go with the individual lenders. John Smith, my neighbor, my friend, they lend the private lender. There's no guidelines, no things, so you had to really read the contracts over.
Okay.
You really need to understand the contract, and also your mortgage broker or mortgage agent who's helping you out also need to understand who those lenders are.
So when you recommend some sort of private lending, is it usually one of these MIC lenders?
Well, only the MIC lenders.
Only
mostly.
MIC lenders?
Only MIC lenders, yeah.
Okay, so you wouldn't deal with anyone else?
I don't deal with the individual lenders.
Yeah. Okay, that makes sense. Makes it a little bit safer too.
And also, I want to make sure my reputation, because at the end of the day, I don't want my clients to be safe and protected as well. And these lenders I work with, their fees are very reasonable, their rates are very reasonable, their renewal rates are $0 to $200.
Okay, yeah. So it's nothing crazy.
It's nothing crazy.
Yeah. And then with that, what's the downside of working with a private lender?
if you are getting into private lending and if you cannot keep up the payment, the chance of getting your house on a power sale is very quicker. So if you are getting into the product that you don't understand, you can lose the product that you have, asset you have.
Okay,
At
so
the
they're
end of the
not as
day-
lenient
At
as
the end of the
bank
day,
is.
they are lending on the equity of the home or property. They are not lending on your cash flow. They are not. They are not looking at your cash flow. They are not looking at the debt servicing. They are not looking at your credit score. They are not looking at your investment. They are not asking for anything. They're like, if my borrower cannot keep up the payment, how quickly I can sell the house?
Oh wow.
Because they are not looking at the income.
Yeah.
Because the clients who are in the private lender, they can secure the financing through the banks and the B lenders, alternate lenders. So these are C lenders, like a private lender. So you couldn't get a financing through these lenders. You're coming in here. It's a pure equity lending. So only saving ground for the lender is how quickly I can turn the property around.
I see.
And you also, as a borrower, you are going through these lenders about, I need the money, everyone else declined me. Only thing I have is my property.
So they're kind of like
So-
they know they're at the last resort.
resort,
Yeah, for
right?
anyone.
But it could be a short-term solution for someone who is going through some financial trouble until they get on their feet. You could have a job loss, or you could have a death in the family. You could have a health issue. You are not able to work. You need some time to catch up on the bills. It could be a great solution. But it depends on, you need to understand who the lender is and how you can exit the lender.
Yeah. Yeah, that's probably also
Yeah.
important.
So you need to do as a mortgage agent, you need to understand. So it's actually the industry got much tighter right now. So right now in the mortgage broker space, you have a level 1 agent and a level 2 agent. You need to be a mortgage agent for 2 years to deal with the private lending.
Oh, really?
Yeah, it's a new rule that came in. So you cannot, if you are a new agent, you cannot serve the clients with the private lenders. You need to be supervised by a senior agent.
Okay.
So FitzRoy is doing enough things in place to kind of control the market.
So also just getting onto that, like when it comes to private lending, let's say you have what you need to as a broker or agent to be able to work with the private lenders. Does that like automatically unlock options for you to go see all the private lenders, or do you have to like build these relationships over time?
There are so many lenders, but some of the lenders you don't want to deal with them because they are not very customer friendly
Yeah, and that's what you learn over time.
over time.
Okay.
So some lenders, they will. You also need to understand the lender who will lend on anything will also, a desperate lender will do anything to get the money back.
Yeah. Okay, that makes sense.
So you need to analyze what the client's needs are. Sometimes when the clients come for private lending, I have told them, maybe the private lending is not the best option. You need to reevaluate your situation, and you may want to sell your property to cash out. Because it's come down to the budgeting and cash flow. The numbers don't lie.
Exactly. Numbers don't
Don't
lie.
lie.
Yeah.
So if we are neck to neck, you are really up here, you don't have any breathing space, how are you going to keep up the payment?
Sometimes, and it's hard for people, especially in our culture, the North American culture. Like everyone wants to live the American dream and have their own home.
Yeah.
But sometimes it comes to a point when you kind of have to give it up.
How are you going to keep up the payment for? Like, yeah, you come and tell me, you know what, I had some difficulties, I'm just going to wrap up the payments, I'm going to get back on feet, I have a big bonus coming, I'm starting a new job, I have a plan to knock this out in 12 to 24 months. Okay, I understand that. Okay, your cash flow makes sense, you have a contract in place, you have a job in place. I just behind on my mortgage payment, I need a private mortgage to catch up before I lose my house. I'm like, great, I'll get you the mortgage, so you caught up on the payment, and now you have 2 payments to make. You already had a cash flow problem keeping up the first mortgage. How are you going to keep up both payments right now? How would you exit? So if you plan to sell, why don't you sell right now?
Yeah.
I understand the market is volatile. You may not get the value. So that's the first response I get. I'm waiting for the market to pick up. Yes. How certain you are the market is going to pick up at X amount of time? And how certain are you, can you keep up this payment for the X amount of time?
Yeah, exactly, because you do have carrying costs.
You have a
on it.
carrying cost. Now you have
Yeah.
2 carrying costs,
Yeah.
right?
Yeah, and then you have to think too, is that carrying cost of new private mortgage that you have and what you have originally, is that going to outpace the difference on what you're going to be able to get if you wait 6 months, let's say?
I think 2007, like 17 years back when I started with TD Bank, my mentor, like I love this guy. His name is Derek Bott. If you listen to this, Derek, you told me a great lesson. He pulled me up and told me, he's like, when we calculate the GDS and TDS, we only include property tax, mortgage payment, and heating cost on a gross income, not on the net income. But how you really live your life is you live on your net income, and after taxes, you have to include property taxes, mortgage payment, maintenance fees, hydro, car insurance, gas, childcare, Bell Canada payment, Rogers payment, groceries, all those things. So you really need to evaluate for your clients before you ask them to get an exception to get a mortgage, how they can afford this.
Yeah. You have to take into account all the expenses that you have coming throughout your life.
Yeah.
Yeah.
Where the GDS, TDS is very high level on a gross income. And you are taking another $100,000 private loan at 14, 15%. Look at the payment on that.
Yeah. Yeah, that's huge.
Yeah.
And plus, how much is going to just paying their interest?
That's only interest
Yeah,
payment.
it's just interest. Yeah.
So it's costing you $30,000 or $15,000 plus fees, almost $20,000. If you keep that for 2 years, you're paying $40,000 in interest.
Yeah.
And how do you know your house is going to appreciate by 100?
Exactly. How do you know that? Yeah.
It's an interesting world out there.
I think you just need, like, at the end of the day, if you're going to do anything with private, what you're saying or what I'm getting from you is that you need a plan. You have to understand, like, why you're doing it and how you're going to get out of having it. It's just going to help you take that step.
And that's why it's very, very important you talk to the right mortgage agent who put your client's interest first, not getting you the money. It's easy to get the money out there.
Yeah. At the end of the day,
especially in the private money, everyone's going to get you the money. Understand who the borrower, why are you getting the money? How are you going to keep up the payment?
Yeah, and even if it makes sense what you think you need to do.
Exactly.
Yeah.
If not, just... And also I tell them, like, if you are really taking the private mortgage to prolong the financial difficulties, you are going to be selling the property at someone else's wish, not at your own wish. You don't have a control of the transaction. Because you are being forced to sell it. Now you are in full control of it.
Yeah.
You are in control of your property. You are going to make the decision what's right for you and your family, not a lender or not someone else.
Yeah. So when the person first made the decision not to sell because they wanted to take a private mortgage to float it, that was a decision they made. But later down the road, they might not be able to make that decision.
The lender is going to make the decision.
The lender is going to make it at that point.
Yeah.
Yeah. Okay.
With
very interesting.
multiple costs.
Yeah.
Like some of the private, I get this payout statement and all these power of sale notices. Inspection fee, $300 a day. I'm like, what do you inspect? The house is there. Like, are you literally going and checking on it? No. Like, those fees adds up.
Okay, so there's all things in the back end that...
It ends up.
Yeah.
So make it very clear, not all the lenders are bad. Not all the private mortgages are bad. The private mortgages have saved a lot of people's life, families, lifestyle. They have put the kids to school, but you need to have a plan. That's what I'm telling you.
Yeah, yeah. Just have a plan. If you're going to.
If you don't have a plan, it can cost you a lot more.
Yeah, exactly.
Yeah, I'm not against private. I still practice and I still do private mortgages, but you need to have a plan.
Yeah,
and you need to make sure it's the right fit for your client.
It's not the end all be all.
Yeah,
it's like a little band-aid to help you get to the next step.
Yeah,
yeah.
But you know how to rip the bandage out.
Exactly. Yeah. Okay. I know we got a little bit off topic at the end going into the private mortgages, but I think that was exactly what we needed to do.
A lot of people, like, especially right now, this is one of the most commodity right now everyone's getting into.
Yeah, really.
Yeah.
Wow.
Because everyone's short on cash, right? With inflation and the mortgage payments gone up.
So they need something to help them.
They need someone to kind of get through it. I'm not saying don't do it, but make sure you have a plan.
Yeah. So I know this is running a little long, but with the inflation going down and interest rates going down, if someone came to you and said, I need a private mortgage now, and my plan is in a year or in 12 months, the interest rates are going to be lower and I can get a lower interest rate on my mortgage. Is that an answer that tells you they should get it?
It depends.
Yeah.
So your interest rate going down, by 2%, but your payments also going to go up. Like you're taking extra money out.
Yeah.
how are you going to pay that off? Like you cannot keep paying the interest for years. You need to come out of it.
Yeah, quick.
Yeah. So what's the exit plan? If someone don't have exit plan for more than like in less than 2 years, you need to really reevaluate it.
Yeah. Because the amount that you're going to be paying in interest is going to be way too much.
Yeah, you may refinance it. Okay, you may refinance it and blend the private mortgage into the bank or a B lender. Great. How? What's going to change in your income? Are you expecting a promotion? Are you having a family member who's going to co-sign you? Are you planning to downsize? Like, what is your plan? Some people, they really want to downsize. Right? They're like, you know what, I just want to get through it. My kids are going to school. I don't want to make any changes. I'm going to sell the house in 2 years because my kids will be out of school.
Yeah. Then
Great.
you have a plan.
Then you have a plan.
Yeah. Okay. Makes sense.
I don't want to have, when I hear, I'll figure it out.
Yeah. You don't want that.
You don't want that. Yeah.
No. That's when you know you're in trouble.
Exactly.
Yeah. All right. Well, I think we gave everyone a lot of information in this one.
Perfect.
If they have any mortgage things that they need to get done, they need to find a lender, who can they contact?
DM me or call me at 905-999-7193. Perfect. Thank you, Chris.